Nvidia and AMD stock were both down significantly on the day after the companies unexpectedly disclosed that the US had effectively implemented a soft ban on the companies selling their most advanced artificial intelligence chips to China and Russia. Nvidia made their announcement late Wednesday night in a filing to the SEC that the US government had imposed a licensing requirement effective immediately that any sales of the company's A100 and forthcoming H100 integrated circuits required a license to sell to China. This will also impact all sales of future AI chips that Nvidia develops. Nvidia said that the company's outlook for its third fiscal quarter, provided on August 24th, included approximately $400 million in potential sales to China, which could now be lost due to this change. The company's guidance for the third quarter was for roughly $5.9 billion of revenue, so this new restriction alone could lower their revenue for the next quarter to $5.5 billion. This new restriction on sales to China will also affect all of their future quarters and is a significant loss of potential revenue for the company, which is why the stock was reacting so negatively today. This is unfortunate for Nvidia as well, because these advanced chips are the ones used in its data center business, which is the segment in the company that was expected to drive the most growth going forward. The new restriction on the data center segment will likely hamper the growth and performance of the data center going forward, as this is not just a one-time issue. It's going to be a permanent weight on data center revenues, since they are going to be blocked from selling their most advanced chips to China going forward. Nvidia said in its filing that US officials said that the requirement was due to a potential risk of the products being used by a military end user. AMD also confirmed that it had been given the license requirements by the US Department of Commerce for all shipments of its MI250 integrated circuits to China or Russia. But AMD doesn't expect these restrictions to affect their business to the degree that Nvidia is being affected, with AMD saying, quote, "We do not currently believe it is a material impact on our business," end quote. This new soft ban on Chinese sales is also coming during a time where Nvidia's stock has been particularly weak and has already been missing recent expectations. Nvidia reported its full earnings on August 24th, but the company had issued a press release ahead of time with preliminary numbers warning investors that the company would be missing its prior guidance by a significant amount. The company had $6.7 billion in second quarter revenue, which is a major shortfall from the original guidance they gave of $8.1 billion in revenue. This means that Nvidia missed revenue for the quarter by approximately $1.4 billion, which is huge. The major Nvidia revenue miss was largely due to very weak gaming revenue of $2.04 billion, which was down 44% quarter over quarter and down 33% year over year. The company said that the revenue deterioration was, quote, primarily attributable to lower sell-in of gaming products, reflecting a reduction in channel partner sales likely due to macroeconomic headwinds. In addition to reducing sell-in, the company implemented pricing programs with channel partners to reflect challenging market conditions that are expected to persist into the third quarter. End quote. Nvidia said that it expects these macroeconomic conditions affecting their sell-through to persist, so it's adjusting its channel prices and inventory accordingly with its gaming partners. This lowered pricing power for its gaming products has the potential to be a major blow to the company's bottom line and future revenues if it turns into prolonged pricing weakness going forward. Another reason for the weakness in Nvidia's stock results is Nvidia's graphic processing units are not only sold to gamers, but they have long been used by cryptocurrency miners to mine Bitcoin and other crypto. With the crypto boom the last couple years, crypto miners were racing to buy GPUs from Nvidia and other GPU suppliers in order to mine more Bitcoin and other crypto. However, the crypto market has crashed this year in a major way, with Bitcoin plunging to below $20,000 a coin from its all-time high of over $68,000 at one point. This has led to much lower demand for the GPUs that Nvidia sells, as there are far fewer customers looking to purchase GPUs for the purpose of mining cryptocurrency. In addition, in some cases, existing GPUs that were being used for crypto mining are being sold directly to gamers in the second-hand used market by miners that are looking to exit the space. This has led to severe weakness in GPU pricing as demand is weaker in general, and gamer demand has lots of GPUs available in the second-hand market. This leads to the even more glaring issue in the recent earnings report beyond just the revenue miss. The GPU weakness means that Nvidia experienced major gross margin reduction due to these previously discussed issues. The outlook for this quarter had previously been for 65.1% GAAP gross margin, but instead the results disclosed a 43.5% GAAP gross margin, which was over a 20% slide in gross margins and hurt profitability this quarter for Nvidia in a significant way. Nvidia said that they believe the company's long-term gross margin profile is intact, and they have slowed operating expense growth to compensate for these lower gross margins and are focused on balancing investments for long-term growth while managing their near-term profitability. The company also noted that they plan to continue their stock buyback program as normal. But this massive revenue miss is a bad look for Nvidia's stock, because it currently trades at a major premium valuation relative to other semiconductor stocks, with a PE ratio of over 45. For context, the iShares Semiconductor ETF, which tracks 30 US listed semiconductor companies, has an average price to earnings ratio of 15.45. So Nvidia stock currently is being given a premium valuation of over twice the average price to earnings ratio for US listed semiconductor companies. While Nvidia is definitely a fast-growing company that has warranted a premium valuation to this point, if its growth starts to slow down like we might be seeing now, Nvidia stock could fall quite a bit, as its valuation comes in line closer to the sector average. For this reason, it will be very important to watch Nvidia's earnings results going forward to see if this is just a temporary slowdown in business for the company, or if it could be the start of a longer-term slowing in its growth, which could hurt Nvidia's stock price multiple. But be sure to let me know your thoughts about Nvidia and AMD stock, and the recent licensing requirements on Chinese sales for their advanced artificial intelligence chips. And leave a like on the video and subscribe to the channel for more investing and finance content. Thanks.